So the ones I'm specifically focused on right now are subject to purchases, where a subject to purchase is when you come in and you take over a mortgage. So you're not assuming the mortgage. So the mortgage is actually staying in the seller's name. The only thing that's happening, there's titles transferring. So you own the property, just like a traditional purchase, but the debt stays in the seller's name, which is actually, it's really scary when you say it like this. It's very scary. And there's definitely bad actors in our space that give it a bad name and a bad rap, because there's, for every one bad deal that goes wrong, that's what everybody picks up on. But there's a lot of people doing it correctly. And if you're doing it ethically and doing it transparently and setting up proper systems in place so that you don't put people in a bad situation, it's an amazing way to purchase real estate.
Welcome to the She's Got Assets Real Estate Investment Podcast. I'm the host, Shona Lepis. Follow along as we unpack and demystify real estate investment strategies through expert interviews and personal experience. From how to find off-market deals to creative financing to long-term and mid-term rentals, we aim to educate and inspire others to gain financial freedom and generational wealth through real estate. And as always, please subscribe so you never miss an episode. We really appreciate reviews. It helps others find us and it just helps us get found.
Hey everyone, we're live. This is Shona from She's Got Assets. I think it's working. Fingers crossed. Okay, I'm going to say we're live at everyone. So welcome to She's Got Assets. I'll live stream, actually podcast as well. I'm super excited to be here. I took a little break for the holidays. I have Robert, and I'm going to say your name probably wrong. Harden, as I say that
You
right?
got it. Just like
Okay.
James Harden, the basketball player. Yep.
Perfect. Robert is definitely one of the players in Portland, Oregon, the market I'm in. He's very much into creative financing. We're always at the same events, really interesting. So I just think it's going to be a fun topic about creative finance, all the nuance, especially Subto, right? So we're going to focus on that. So Robert, welcome. Thank you for taking the time. It's awesome to have you. You're definitely really knowledgeable on this. So I'm excited to dive in.
Thank you so much for having me. I really appreciate it. You're such a rock star in our community. Like every event I go to, you're doing all the things and all the people. And I don't know. I just love being in the cool kid club whenever I get to meet people.
Thank you. I always feel like I'm an outsider. I'm like trying to get in the cool.
Oh, no way. No way. Like all the stuff your projects you're working on and everything. Like every time I hear someone talk about short-term, midterm, your name comes up like continuously. So I love it.
Awesome. I appreciate that. Do you want to do like the nutshell? You have a couple hats, I know, and then we can dive into the meat of this. But I always like people that you know yourself better and you can explain what your focus is these days. That'd be awesome.
Yeah, yeah. I'm really focused on purchasing properties creatively, typically through subject to purchases. I got my start, my first couple deals were cash deals in the beginning. And after going through the process of how expensive it was to take down properties with cash and then refinance them and try to do burst strategies, it was very difficult. Like we had a hard time getting stuff to cash flow, especially here in Oregon, where the price point's so high and then the rents are just not supporting that business model here. People are still doing it, but it's not as common. I have friends in the Midwest, they don't even care about creative. They just want to do burst strategies all day long because they're buying houses for 30 grand, putting 50 into it, and then DSCR loans, and they get cash back and they're cash flowing. I really wish that we had that kind of stuff here, but we don't. So I had to pivot in a different direction. And I was listening to different podcasts at the time. I was listening to Bigger Pockets. Like everybody gets their start in Bigger Pockets, a lot of people. And burst strategy is like the thing in Bigger Pockets. And I had this guy on that was talking about all these crazy things he was doing creatively, buying houses for like very little down and taking over mortgages. Once I went down that rabbit hole and studied under, it's Pace Morby is the guy that I'm talking about. And then joined his community. And then once I learned how to do these type of transactions, that's all I want to do now. You can buy like one of the properties we purchased in Salem. We got it for a little over 500,000 was the purchase price, but it only cost us $24,000 to buy this house, and it was fully furnished. It had over 30 grand worth of furniture that came with it. And it was a brand new house, 2 years old. Well, for $24,000, we took over the mortgage. We turned it into a short-term rental. It's averaging right about net around 4,000 a month. It's a little bit of a bigger house. So it's covering the mortgage payment. It's taking care of all the things and it's putting about $800 a month in our pocket. That's the
That's
kind
so
of that you can do.
I think what I love the many things is leverage, and that's the ultimate leverage, right? That we have. Okay. So I want to step back a little bit. I love that story and I want to dive into it again, but I think we throw around creative finance like loosely. And there's like, it's a big umbrella word. Like when I think creative finance, I'm more focused on owner carry and installment plans. But I think the beautiful thing is what we're talking about is like the creative stuff. So let's just maybe unpack like when we say creative, you're focused on Subto, that's great. So I think when you're talking about the stuff too, I think of it as a toolbox, right? What's the toolbox of options? We don't want to just have one thing. And I just want to reiterate too, I'm paid for mentorship. I think coaching, I think we often say, oh, we don't need that. But you know what? You really need, I believe I'm speaking personally. I think you need those tools. And that's by doing coaching or just spending tons of hours watching YouTube. I don't know.
100%. The coaching, oh my God, you're condensing someone's 10, 15, 20 years worth of experience into a very short period. So the ability to get up to speed is so much faster with coaching. So I've benefited greatly from that. But yes, going back to what you're talking about creative finance, it's a huge umbrella of opportunities. So the ones I'm specifically focused on right now are subject to purchases, where a subject to purchase is when you come in and you take over a mortgage. So you're not assuming the mortgage. So the mortgage is actually staying in the seller's name. The only thing that's happening, there's titles transferring. So you own the property, just like a traditional purchase, but the debt stays in the seller's name, which is actually, it's really scary. When you say it like this, it's very scary. And there's definitely bad actors in our space that give it a bad name and a bad rap because for every one bad deal that goes wrong, that's what everybody picks up on. But there's a lot of people doing it correctly. And if you're doing it ethically and doing it transparently and setting up proper systems in place so that you don't put people in a bad situation, it's an amazing way to purchase real estate.
You know, I think every industry has the characters, but I think we're dealing with big life decisions, very large numbers. So I think that's even more why we get called out, right? And there's a lot of ethics to go into any real estate deal, but so I just want to say that I think I think that's why you need to learn the tools and do things correctly. So I'm glad that you said that. Okay. So let's go back to, there's different ways. What is it? How are you finding these guest deals? And then we can unpack like how you do a deal in the right way.
Yes, yes. So so if you want to find a deal today, you can actually just get on Zillow for free. Get on Zillow, find stuff that's been on market for 90 plus days. That's the first step. So if you and the reason 90 days is the kind of the marker is there's pain there. Someone put their house up for sale. They've had either offers or no offers, and they've done price drops. They've done all these things to try to move the property, and they can't move the property. So that's the first indication of a pain point with a seller is that, hey, I can't sell it for what I need to sell it for. And all we do is we look for opportunities like that, and we just call them. These are on market. Call them up and ask if they're open to a creative offer. And that's one way that we find them. Now, if you're willing to spend some money on different tools, there's different tools available to find these listings too that are a little bit easier, like PropStream. That's the one that we use. So we'll take PropStream, we'll set up a filter for 90 plus days. But there's other filters too, low equity. So that's the other one. So that's typically the ones that sell in this manner because they want to sell their house, but the debt's just too high. So they have to come out of pocket in order to do a traditional sale. So that's where we can come in and let's say they have to pay $20,000 or $30,000 out of pocket to sell their house, to pay the agent, pay closing, all the things. We can come in and go, hey, Mr. Seller, we're going to put money in your pocket. We're going to pay the agent, and this is how it'll all work. So if you can explain that to them, you get your foot in the door. But that's how we find the majority of our opportunities.
Okay. So when you're calling like on market, right? I know, are you talking to the agent that's listing it and saying, is that how you're
Yes, yes. And it's a very difficult conversation because, well, a lot of agents are getting more educated on this, but there's plenty of agents that, oh my gosh, they are so upset. They think it's a scam. They're like, you're the 10th person to call us. There's a lot of stuff to overcome there with those types. But yeah, it's a conversation with the agent.
Okay. And full disclosure, I've been studying sales because I'm realizing in real estate, you have to, it's a sales hat. No one really says that, but it really is. So I'm in that vein. So what are the typical like objections or fears that you have to explain, or what are the most common things that if you get out, if you lead with that, like, okay, here's the things you're worried about. Here's why it's not an issue. I'm just curious.
Yeah, yeah. So the biggest one that everybody has is they don't want to leave the debt in their name. If they understand a little bit of how it goes, agents that are open to it usually go, you're talking about an assumption, right? That's the first thing that comes up about. You're talking about assuming the loan. I don't know if the loan docs allow that or not. So that's usually the first thing that comes up. And then we just pivot to, no, it's not an assumption. This is basically how it works. This is how we're going to transfer title. The debt's going to stay in their name. We have instruments that can protect the seller. So we go over how we're going to protect them. But usually it's only one or two touch points on that. Because most of the time, once you get that part into the conversation, if they're open to it, they usually say, hey, we need to talk to our seller and see if they're open to something like this.
Hey there, savvy investor. Quick question. Are you ready to jump into midterm rentals but not sure where to start? I've got you covered. And She's Got Assets. We help real estate investors set up and fully book their first midterm rental with quality guests so you can double or even triple your cash flow. And here's the kicker. We dive deep into marketing strategies, including how to tap into the lucrative niche of getting insurance leads for displaced families. These are long-term stays that can really boost your bottom line without all the hassle and regulations of short-term rentals. Sound interesting? Head over to shesgotassets.com/MTR and get all the details. And if you're new to real estate investing, we've got something just for you. Check out our REI Playbook course where we teach you how to snag your first investment property by finding off-market deals without cold calling or door knocking. We'll even walk you through creative deal structures like owner financing and how to leverage what you've already got. You can find all that goodness at shesgotassets.com/REI. Oh, and one more thing, don't miss out on joining our free She's Got Assets community. We've got a ton of resources plus weekly live streams where you can dive deep into strategies to help you succeed. You don't want to miss it. Trust me. Hop into the community at shesgotassets.com/network and let's get you crushing those real estate goals. All right, back to the show. Okay. That made me think of something. So the kind of ideal candidate is 90 days. There's pain on that. And then did people actually list their house with not enough equity to pay the fees? Does that happen?
All the time, all the time. You see all these price drops. Usually they'll start out. It's funny. They, instead of comping the property like they're supposed to do and go, okay, this is where we think it should sell. And then basing their sales price on that, they go, hey, I need to get this much to clear out the mortgage. So therefore my fees are going to be this, closing's going to be this. And they set their sales price there. Typically that's how they work the math backwards.
Okay.
Yeah. It's really funny the way that they do that. So especially when they start doing price drops, you can tell that there's a lot more stress there. Cause when we talk to those, they're like, my seller really can't go lower than this. And then if you push a little bit further, they're like, because they're gonna have to come out of pocket. Like the mortgage won't allow them to take any less. That's usually what we hear. Now, that's
So
one. Oh, good.
oh yeah, go ahead.
As I say, that's one way. The second way we find these are expired listings. So expired listings, agent that tried to sell it couldn't sell it. Nobody offered him a solution like what we're offering. So now we're hitting those sellers, or they had an agent that wasn't open to it. So we circle back around, talk to, and it's sad how often this happens. We usually will call up and go, hey, did your agent talk about this offer? And they're like, we didn't even hear about this. We have no idea. So the agents aren't even bringing it to some of their sellers. And we explain the situation, how it all works. And usually, not usually, but there's a good percentage. Well, I mean, the ones we purchase 100%, yeah, they're open to it. But some people are a little scared and nervous of it too.
So are agents, I'm not an agent, so I'm not, but are they sometimes concerned how they'll be paid if it's a creative deal? Does that ever come up? And how do you address that?
Oh, 100%. They're all, in fact, I say that probably 90% of the time, that's one of the main reasons why they don't want to present it because they think they're going to make less commission. So we actually make that clear up front that they're going to get paid. Said we're going to make sure that our down payment or whatever we give to the seller is going to be enough to cover your fee. And I usually bring that up in the call. Say, what are what's your listing fee on this one? Are you looking for 2.5%, 3%? What are you looking to make here? And some of the crazy ones will say things like 5%. Yeah. And we're like, that's going to make it really expensive for us to get into the deal. And it doesn't really help your seller. So then we're like, hey, usually we pay people 2.5% on this. Are you okay with
Got it. And I'm curious because I'm just curious as far as presenting, hey, there's interest and creative interest, but if it's on an offer, are they not financially obligated to present that? I don't know that line. I'm just curious how
Yeah,
that works.
they are obligated if they get a written offer. So sometimes what we have to do is take an agent friend of ours and have them actually send the offer. If we really want to push, usually it's easier to have the conversation and get everybody on the same page to move forward. But if you really want to be more aggressive or assertive, then you need an agent on your team to actually send in written offers. Because I found out that it's like a $10,000 fine if they don't present the offer to their seller.
Interesting. Okay. But obviously, if it's friendlier, it's better.
Yeah, yeah. You always want to come in because it's an uphill battle when you have an agent fighting you the whole way because they have the seller's ear. So they're going to talk smack about you the whole time, tell you why you're a scammer or why you shouldn't do this. I have one right now in Southeast Portland. It's the same thing. I've had really good conversations with the agent and everything was moving towards it. And then the guy just ghosted me. He just totally dropped. I can't get a hold of him. And then somebody else on our team has been texting him and getting the real scoop on it. So I don't know. I guess my approach, he just didn't like me or what I was saying, but he's being real friendly with other team members, but he still won't present it to the seller. He won't give them that option.
That's so interesting. Yeah, it seems like if it's done properly, it's really when the seller gets paid, the agent gets to walk away, and then they're proposing something that there's no other option. If it's just sitting like this, it's a weird market. Like,
This dude would rather, it was actually a short sale. He was taking his seller down a short sale, which is going to affect their credit, black mark on there. And I said that, so I was selling really hard. I was like, you don't need to short sale. We can fix their credit. This provides so many benefits, like having a performing mortgage on your credit, huge benefit. It just builds your credit.
okay, I want to unpack that, but I just want to step for 1 second, step back. I think when we're looking at deals and how we're getting creative, a lot has to do with if there's debt on the property, if there isn't debt. And that's something that's really important. Like what kind of debt? If it's debt free, then we're probably going down an installment. But I think it's a big part of the puzzle for anyone that wants to get into creative. That really dictates to me like what kind of solution you can present creatively. I don't know what you think.
100%. Yes.
Okay. But yeah, no, okay. I love what you said about, so I think this really is a win, but I think we have to position it in the right way. And so if you make that call, is the next step, hey, let's have a sit down over Zoom, or what's the next step in that process of talking to an agent representing a seller?
I love doing Zoom calls because on the phone, you just can't communicate everything. Zoom calls are so much better. I've had sellers where they just feel really at peace and good with the situation by just having a group call, a Zoom.
Mhm.
Yeah, usually we get on a Zoom. We walk them through the documents and show them how it all works, how we protect them. So we talk about wraparound mortgages. We talk about servicing. We talk about what if we get abducted by aliens and we're no longer here. Like that's a big, people should be concerned. What
Yeah.
happened? People die all the time. It's just the way things work. And what's going to happen if something like that happens, you know?
Because I think ethically, if we are saying we are going to buy subject to your existing, that's a big responsibility. And the seller should be vetting us too. Are we I don't know. To me, I would tell someone, yeah, that's great, but make sure you're vetting whoever's buying it because so how do you present yourself as a qualified buyer? Is it just process or I'm curious if that's ever
Yeah. In the beginning, before I had any Subto properties, so the very first ones I got were foreclosures. So they're people in really bad situations that don't really have any other options other than having a foreclosure on the record. So they would rather opt for someone to come in and save them and fix them, save them from foreclosure. So the first ones I got were that way. that opened the door to better conversations with sellers that weren't distressed, that just wanted, they had the means to let it sit for a year until it sells. They're like, I'd rather not waste $30,000 in mortgage payments to go down this process. I'd rather just sell this way. So those ones, we show them all the properties we purchased. This is how we did it. These are the properties. It's been performing for this amount of time. These are our reserves. So we talk about reserves. Like we set aside money for tenants, vacancy, capex, all that kind of stuff. So yeah, we have a reserve account. So we show them all that stuff. We also talk about, like, in our situation, we have multiple businesses, and that's one of the reasons why we're purchasing these is for depreciation. It's a big benefit for it. So when we explain all those reasons why we're buying it, it makes sense to them and they view it as less risky.
That makes a lot of sense. Yeah. Because I think that it's if anyone, there's a lot of due diligence, I feel like, in any transaction. And yeah. So if you are positioning this, if you don't have a property, is it better to say this is just, here's my whatever experience I have to bring to the table. I'm a homeowner. Like, how do you position yourself if you maybe haven't done a deal like this? Or what would you say? I'm
Oh my
curious.
gosh, that's the best. So you need to work with experienced people. That's
Mm,
exactly,
okay.
I have people that bring me stuff all the time because of
Mhm.
that.
Okay.
And there's plenty of people in our market and any market actually. Like I would seek out the people that are doing the deals, work on their,
Mhm.
because you can leverage their credibility to get into these. So that's the hack. Actually, if you want to get started, I would say start with buying some foreclosure ones. There's plenty of them.
Mhm.
Those are the easy ones to get into. The harder ones are people that don't have the stress or the pain, other than they have a high mortgage balance in their house, doesn't have any equity.
Okay. Okay. Yeah, that makes sense. But I also think, yeah, if you don't do this the right way, you could really hurt someone's credit or not do them right. So it is being it's very ethical and knowing what you're doing. And if you don't ask for help, okay. So okay, how I want to talk about, like, protect. Is there anything else we didn't cover up till I want to get into, like, the weeds of protecting, how we protect the seller and the buyer and all of that? Is there anything else that you would say for someone that's, like, curious or talk about this with the seller? Or because I think it's sales. I don't know if you think that, but I've had this recent switch of it's actually there's a reason why there's sales training, and you have to get people are uncomfortable talking to sellers because they don't know sales.
Oh, 100%. It's about making friends. Like, this industry is all about making friends and being able to make friends very quickly. So when
Mhm.
you're on the phone, and that just takes, I think it's just one of those things with practice, because everybody, if you go back to your first phone calls, I know when I go back and think about them or listen to them, oh my,
Right.
so clumsy and so much stress and like sweating out my shirt after. Okay, I just did an hour of phone calls. That was stressful. I'm gonna go change my shirt and come back. Yeah, there's a tremendous amount of stress involved in that and just getting comfortable. So it's a repetition, like just
Mhm.
having conversations about that. I'd say if you want to get started, that's the easiest way, is just start calling agents on market. Like they typically answer their phone and they want to get a sale. Off market conversations are a lot more difficult. On market, as far as, most agents are pretty friendly.
Mhm. That makes sense. Yeah. No, the first, and I, from my, in my, like, or like, I've been, like, a long time in buy and hold, but this creative stuff, I'm newer. The more naturally I am, the less I feel like it's not, they're not going to ask you a scary question. They just want to know that you're, like, human, and if you don't know the answer, you don't have to have it. You're just, I think if you're being honest, that's the best.
Oh my
Okay.
God, yes.
Yeah. Cause I send out direct mail. I talk to sellers and I'm like, oh, it's like, they're these hired landlords and they're still cleaning their gutters and their kids don't want the business. And I'm just like, it's interesting. Okay. So the easiest, if you're looking at this to partner with someone, I think I know the Subto community is very supportive. I feel like it's the community piece is, I'm just on the outside of it, but from what I see, it seems to be very supportive. And I think that's also being in the right rooms and buying a table at whatever. If this makes sense to you, invest in it because you're going to get deals quicker, and learning on your own, you're going to be like 2 years down the road, probably just making calls or something.
100%. You'll be going on YouTube, picking up little nuggets here and there. And if you want the shortcut, you just join a community, get on a team. That's what we tell everybody that actually comes into Subto. Just get on a team. Whatever your avenue is, just get on a team. get that experience. Yeah, 100%.
And I feel like too, and if you are, I feel like my audience is very like maybe the newer, and it can be a fire hose. You have to find the strategies that make sense to you, and then just figure out who's teaching that, and or partner with someone. But there's a lot of strategies, and it is a really big toolbox. So step two may not always be the best. I'm sure. Do you ever have leads where like step two, it's really an owner installment plan? Do you ever pivot, or is that just I'm really your focus on that?
Oh no, I pivot all the time because the cool thing about it is that there's so many different ways to do creative. Like today, I spoke to an agent that had a condo and they had a very specific situation where they own it free and clear. And I'm like, are you open to an installment sale? Because that's the natural thing to look for on there. And she's like, oh, she needs a really big down payment. Okay. We did quick math on it and we could get her around 200,000 on the down payment. We're going to bring a lender in to do that and then ask her to carry a second position note for the balance.
Mhm.
So pitched her on that. She says her mom's probably because she needed a specific amount, needed $200,000. The agent actually is representing her mom in the sales. And, but yeah, she needs 200K and we presented a solution that'll work for her. So you just have to understand what kind of everything kind of fits into several different boxes anyway. So it's going to be installment sale, or it's going to be what we call a Morby method, where we bring in a DSCR lender for a first position note, and then we ask them to carry a second behind that. So basically, it's a way to get into a deal for no money. It's the easy way to do it.
So you can get a DSCR even if it's not income producing, or how does that? I'm just
Yeah,
curious.
yeah. So
Okay.
if you have, it has to be income producing, but we have lenders that will actually lend on it, even without a tenant in it. Though typically it's 75% LTV, so they're
Mhm.
going to market rents and things like that. This one we're going to try to midterm it, so we might have to. It's going to be harder to find that lender on that one if we want to get a higher, percentage. So we might need to bring some money to the table or ask for a smaller down payment.
Okay. And then I think that's the beauty of knowing like you need to know how to get into it and then the exit strategy. Is it long term? Is it midterm? In this market, like long term, usually, unless it's multi, good luck.
Yeah, 100.
Yeah.
So
Yeah. Then so yeah, it's interesting. There's just so many strategies, but I think if anyone's watching this, like partner with someone, figure it out. And I think sometimes you just know enough and you get into it. And if you have a good mentor or coach you're working with, someone they'll walk you through it. And then you're like, these things sound really complicated. And then once you do them, you're like, okay, I did it. And yeah. And I think I always like to keep the lens of how can I best serve the person, right? What's the best fit for them too? Because maybe they're looking to avoid tax implications with a cash sale or whatever, right? Then installment plan's a great option, or we're saving their credit with Subto. I think always keeping that front and center is to me is really important. Okay. So I really want to talk about like how we protect as the buyer. I know there's a lot of like there's a lot of things that go into this. And I know Pace recommends like a transaction coordinator, you have an escrow company, but like high level, like how do we protect ourselves? And the due on sale, like I know everyone throws that out as like the big red flag. So what are the things we can do to make sure everyone's protected?
the deal on sale is the boogeyman. That's what everybody. I don't know how many sellers I've talked to that literally like they just can't wait to get you on the call because they're like,
Just to like,
yeah, oh, what are
just
you gonna do about due on sale? Like it's like this big secret or a big scary thing. The reality is due on sale gets called very it like almost never happens. It's like
Mhm.
500 transactions. I think the last statistic we had in our community was like one in 500. I've heard one in 1,000, but I've also heard one in 500. So it's very rare. It does happen though. So
Mhm.
it's not one of those things that I'm going to say that won't happen. I haven't had it happen to me yet, but I'm prepared when it does. So ways to fix it. There's a bunch of different ways. The easiest way is just to deed the property back and set up a lease with an option to buy. So set up a lease option. That's the
Mhm.
basic, easiest one. Typically, we call the bank first. Like my friends that have gone through this, they'll just call the bank and explain when they get the paperwork, they reach back out and just explain what they did and say, hey, we're making the payments. Are you good with the situation? Sometimes they just go away. They don't want to deal with it. Banks don't like to foreclose on properties, typically. So then we're going to do lease option. You can also put it in a trust. That's another way to do it too after you deed it back to the seller. But those, they still look closely at those. So that's not like a bulletproof one. I have friends
Mhm.
that do on sale called in the lease documents as well. Or I'm sorry, with the trust documents. Sometimes the bank will ask for, this is where you can get in big trouble. Somebody in Florida did this. They actually put it in a trust. The bank reached out to them and said, we want to see the trust documents. And they actually sent them falsified trust documents saying that it was the previous seller. That's a big, that's mortgage fraud. They got big trouble on that. So it's better to be transparent, open. Don't try any funny business like that. If you're going to put it in a trust, one of the tricks to do that is to actually have the trust named as the seller, like it's the Shona trust or the Robert Harden trust. If I'm the previous seller or previous owner, 'cause it does make the bank think that it was done properly.
So a trust versus like an LLC is, I'm sure there's nuance to that. And so it's just more a better fit for that.
Yeah, trusts are more expensive. That's why
Mhm.
I stay away from them. The whole process is more expensive.
Mhm.
There's different tax implications as well. Like
Mhm.
you have to consider that it's trusts are taxed at the highest tax rate. So as money, if you have money flowing through that, now if you're only making $100 a month on a rental, it's not going to kill you to pay a higher tax rate. You have to
Okay.
cut down Starbucks for once a month, avoid it. But
Okay.
LLC is that's what I do. I put everything in an LLC. That's the
And you can do that yourself. You just go Secretary of State. It's
yeah.
pretty, yeah. Okay. Yeah. Okay. So yeah, I love that you're just saying just call the bank, right? That's just like, it could be as simple as that. And they can't profit from foreclosures, right? So they can't, they're not good. There's, it's not in their best interest to, have a non-performing note, right? I mean, it's just, that's their business.
Yeah, what if
Okay.
like imagine you're the lender and you're gonna like, oh, this guy's like imagine this. You're having discussions, the note's performing, everything's getting paid, and then we're gonna go spend money to take the property back to for what? Like if you really think about it, it's such a silly thing. Now it's different if you're not performing. That makes total sense. Like it's not performing, but in a performing note, I think that they look at those differently. So
I feel what's funny so this is a little tangent. When I first moved to Portland, it was 2005. I'm dating myself. Houses were like under 200 and I saw my equity going up. I didn't think to Google. I just was too scared to pull it out. So I had a family member buy a property, a duplex. It was anyway, and I've been paying the payments forever. And we were so scared that the thing was not being in it. They've never, I just pay the payments. It's like a Subto was like way back in the day, but like that was, and we've never missed a payment. Like, why would they come knocking on that note? Because it's paid for. It's like clockwork.
yeah.
Yeah. Okay. So that's, and is there, I've heard of like power of attorney. What do we do proactively as a buyer? And I don't know how much of this you can share if there's some
Yeah,
secret
sure.
stuff, but I think we have to be really intentional about like paperwork. That's a big part of this, I would think.
Yeah, yeah. We get power of attorney. So power of attorney is super, super important. Gives you the power to talk to the bank on the behalf of the seller. So that one's super, super important. Other documents we get are insurance assignment of proceeds. So what happens if there's a fire, right? There's a fire, some kind of a loss. You want to have a document that allows you to receive the money so you can go rebuild the property and do all the things. If you don't have those documents in place, insurance assignment of insurance, oh my gosh. I've heard of people, them sending a check to the previous owner. So you have a burned property, previous owner gets a check and they're like, holy smokes, we got $100,000. We got
Just
200.
like free money.
This is the greatest thing we ever did this to sell our house this way. But then you're in a bad spot because you got a house that's burned up and you need to, oh, it's a nightmare. So as long as you have your insurance done properly. So some people I talk to that are misinformed will have two insurance policies. They'll keep the original one in place and then they'll put a new one on it. I tell those people like, no, that's not how we do it. We go get a new insurance policy that lists the previous seller as additional insured. So we want them as additional insured. Our LLC is primary insured, but you also have to have those endorsements on the insurance. If you do not have those endorsements, that's how most people get due on sale called.
I was going to ask you, I've heard that's a trigger. So how do you do that without triggering the bank being notified, I
Yeah.
guess?
So actually switching the insurance doesn't trigger it. It's if you don't list them as additionally insured. So they're
Okay.
not on there. So what the bank does is they go, okay, Rob Harden owned this house. How come Rob Harden's not listed on the insurance? That's like, whoa, this is a big flag.
That's all it is just listing them. And that's what I do with the owner carry. They're listed
That's
as
it.
That's
It's so simple. When you say it, it's so simple, but them not putting on that, it's so funny because that can trigger the whole thing. And then somebody down in the insurance department takes it up to they take it to the other desk. And then this guy looks at it and goes, oh my God, we have a problem here. And they go pull up title. Oh, title transferred. Do on sale.
because when insurance essentially transfers, like I require renter's insurance. It's a dumb example, but I'll get notified of, hey, that didn't rent, whatever it is. So I usually just file, but so the mortgage company will get notified. And if they're like, it'll get flagged. Okay. So it's that simple. Okay. There's
It
not
is
like
that
special
simple.
insurance. Well, I thought there
No,
was some like top secret.
no, it's not even taught. It's so basic on it. It's crazy.
Because when I'm doing a seller installment plan, that's part of my like, hey, and you'll be additionally insured, right? Like I want you to be protected. So I always say that. You just mentioned another document. It was something about insurance, and I forgot the name of it already.
Yeah, it's assignment of insurance proceeds. So you want to make sure you have that in place in case there's some kind of a problem. One mistake I've made in some of my purchases because they were foreclosures and I didn't have direct contact the seller. There was a wholesaler in between that I purchased it from. So I don't know them and I don't have their contact info. So one of the mistakes I made is not getting their insurance information as far as their agent, like getting the agent. So I would recommend everybody, if you're going to do these transactions, get their agent's info because I have one right now where I'm paying insurance twice on it a year. So I can't cancel their policy. Reached out to insurance and they're like, who are you? And I'm like, the guy that I'm helping out the seller.
Yeah.
You need to know, they're asking me all this information. And I'm like, I don't have that information. And they're like,
Right.
oh, I sound like a scammer. So
Right.
they're like, if you're this dude trying to scam and cancel somebody's insurance, so how do they get their insurance canceled so I don't have to pay two policies? They gave me a mechanism to solve it. They're like, this is what's funny. They're like, we want you here. You have to submit it via fax. I go, you guys will give me an email address. I can't just email you this. And they're like, no, you need a fax. I'm like, okay. So I have to fax them documents and call them. And this is my fault. Hopefully nobody knows this. Actually, it's live now, but I haven't had time to follow up with them because I think it's just a couple phone calls away going through the channels to try to get this canceled out so I can save $1,800 a year on a rental.
Right. Yeah. It's one of those like little things. And then, yeah, the faxing too is just like, did it go through? Oh my gosh. Yeah. I have my phone.
I know.
Sorry.
Did it go through? Did they get it? I know. It's so stupid.
Oh my gosh. Okay. So that's sorry, my,
Oh, you're good. You're good. That's one of the
someone,
big ones. Insurance is such a big thing on there and getting the right policy with the right coverage. We have an insurance carrier that's very well versed in Subto that does them right. That's the other part too, is getting somebody that can actually do it. Yeah.
yeah, that makes sense. And that form, is that something that's like that's just something you can ask someone for? Or is that something that's in the community, that assignment of insurance?
You can actually, yeah, it's in our community. It's also, so if you're doing a transaction, I recommend using a transaction coordinator, somebody that's gone through the program. Pace has a whole program for it. They're all trained to do creative type deals. So if you hire a TC, they're going to have all those documents for you. So they're going to make
Okay.
sure they collect all those. I would say the one thing that they're not doing that I wish they would do is get the insurance agent's information from the seller, because that would have solved my whole problem. I just call the agent, explain it. They would reach out to the seller and say, did you do this? And they say, yeah, I did do this. Great, cancel it. And that would have solved all my problems.
It's those little details though, right? And what the headache is, like, would have just been like a simple, yeah, it's whatever at this company. That's so interesting. Okay. Really good tips. Okay. Let's talk about like servicing, right? Because I feel like that's another important piece of this puzzle and being buttoned up.
Yes, servicing is so key. Okay, so servicing is a pain. It is an expense, an extra expense, because the easiest way to do it is get into the portal or get portal access. We do that on all our deals anyway, because sometimes this is what happened. I just had this happen actually last month. I had a seller reach out and go, hey, you didn't make the payment on the house last month. Like, what are you talking about? They're like, we got a notification from the bank that the payment, normally it comes on the 5th and it was like the 10th. So I call up servicing. I'm like, what's going on here? They're like, oh, we mailed the check. We mailed the check. I'm like, because they pulled out of my account, they mailed
Right.
the check. And I go, okay, I can't put the seller. So this is what I did. I'm like, I can't put the seller in a bad spot now. I'm going to go into the portal and make a payment today. I want you to stop payment on that check and then refund it to me. And that's exactly what we did. So they refunded the check, made a payment in the portal. I sent the seller proof that I did it through the portal, and they explained all the things like servicing just messed up. And I said, please ask servicing, please send them an email, let them know that you messed up. Like, I don't want them to think that, things are going south. So, and they did, they reached out. So it is important to have a good servicing company because you want your payment to go to the servicing to make the payment to the mortgage, and then to send a statement to everybody so that everybody knows that everything's being paid.
100%. Yeah. And I was again within the creative umbrella with an installment plan. I'm saying we're using a servicer, you're getting paid, they're doing the tax stuff. It's like clockwork, right? I'm not writing them a check. So I think that, and it really, you don't want to ever be like, hey, I'll send the seller money and they're going to make the payment. That's the wrong thing.
Oh, never do it that way. I could see, yeah, I could see massive problems happening there.
Yeah. I don't know if anyone, that's what you might think you would do, but and servicing companies, like, and there's not that many of them, but I think like Escrow out of Montana, there's Fidelity out of Montana. I don't know who you use, but there's a couple of them out. Maybe there's more than I know of, but that's their job. They just move money around.
Yeah, yeah. I'm using Guardian Contract Services. They used to be Lake Oswego. I think they're Tiger now, or maybe I have that backwards, but Guardian's one that's a really good one. Evergreen Loan Servicing, I think they're out of Eugene, is another good one.
Okay.
I know there's a couple others. I think Future or something like that. There's a company out of Roseburg. I don't know why I did it, but I let the seller pick their servicing. It was on an installment sale.
Okay. Yeah, like they all do the same. I go with my own title because I know they'll do shop at service. Yeah. Okay.
Yeah.
So servicing, and that's something. I'm so sorry. My friend's daughter is like extremely persistent. I'm on Do Not Disturb. I don't know why it's ringing. They do FaceTime and she's in California. It's reality.
You're getting double dialed. Somebody, if you didn't dial 3 times, you did that.
What I need to do with sellers. You just keep going.
Oh, yes. I've been there many times where I'm like, I know they're there. I'm just going to keep calling.
I totally lost my train of thought now. Okay, so servicing. So when I've done it, I don't know, it's set up through escrow. I don't know how you do it, but usually it's done through escrow and it's all, you pay the setup fee, which is nominal, and then it's just set it and forget it. But
yeah, no, it's really, we do it all through escrow at the beginning, or when the transaction closes, all the documents are set up, and then they usually send it over to servicing to get your account set up and to get it funded and moving and everything. But the other thing you have to keep track of too, the one thing I don't like about servicing on a Subto mortgage is that when you have to be paying attention to it at the end of the year when taxes reset and payments go up, because the servicer, they go off of what their paperwork says. So
right.
you need to, so I'm going through right now and making sure that I update them on all the new payments so that I'm not short $20, $30, $50, whatever.
Because if you are, that's not a full payment. Like it's got to
Not
be
a full payment. Yeah. You're like,
right.
you're short, which is just silly. But the portal is ultimately the best. I have a bunch of portal mortgages too. So I like those.
So the portal is like B of A or something. What if that gets sold? Then it's a different portal, right? How does that
So
work?
annoying. So like most of the
Right.
stuff we have is Mr. Cooper. We have a bunch with Mr. Cooper, several with Lakeview, and then there's a VA one too. There's all these different portals, but I have all the different logins set up. So I usually set up an email with the address, and I have my own domain. So just a forwarder to my regular email. So I can keep track of, so we have multiple ones with multiple servicers. So when you see it come in, you're like, okay, I know which one this is. But yeah, so I do prefer portal because they just rip the money out ACH. But some of the portals are really stupid where they won't allow LLCs. Like it has to be a personal account.
Oh, really?
Yeah. Set up to where my business account transfers into a personal account and then the money's ripped out. So I don't know. You have to be really creative with how you're paying for your stuff too.
But if that you're taking it subject to, and that note gets sold to a different servicer, you just have to just notify the servicer, right? Just like a couple of steps, right? Because that happens, I feel like more often than not. I'm like,
Yes.
now the hassle.
Yeah. As soon as they sell your mortgage and you get the paperwork, you got to get it into the servicer and have them update addresses and all that fun stuff.
So there's a lot. Yeah. There's a lot of details, right? And if you're not like, again, so hire someone that knows how to do this. Don't just wing it, because any of these things that could be really major, it could turn into something big if you're.
Oh, yes.
So that's we talked about how so protecting the buyer, you're the buyer, all that stuff. Is there anything else in the protection side of things like that you do like proactively?
Yeah, it's pretty much the paperwork. So just having it like our contract. So in Subto, we have a contract that we're allowed. It's one of those, we sign an NDA when you come in. You're not allowed to share the contract
Mhm.
outside. So the contract is so good because it literally on there, it talks about due on sale. It talks about the mortgage not being transferred. It gets really redundant because they say the same. And the reason why it's set up this way to say the same things in different forms over and over again is because they've gone through lawsuits in the past where people go to take them to court and go, I didn't know that the mortgage was staying in my name. They will have those excuses, but now you have a contract that literally it would be embarrassing. Oh, like a judge is going to look at it and go, how do you not know? And we make everybody initial. There's all these disclosures. So literally, it's really annoying. I'll be honest. When I'm going through the contract with the seller, I tell them that it's really annoying and really redundant. And as we go through it, like they fully feel that and see. So that's one way that we protect ourselves is having a really good contract with the
Mhm.
seller. But everybody
Okay.
knows what's going on. But it's really important to protect the seller, especially when it comes to wraparound mortgages. Like the very first few, I didn't even know the difference of, we call it a naked sub two. So basically it's transferring title, mortgage still remains in seller's name, but there's no instrument for them to use to take the property back in case you default.
Mm.
In order to bridge that gap, what we do is we create a new mortgage that goes around the existing one in favor of the seller. So that in the case that we're not here, we don't perform, they could take it back the same way that the bank could take it back. So they have an instrument to take it back, which
Which
is
I
what
think powerful, and that's the right thing to do, right? Because otherwise they don't have any recourse, right? You stop paying and they're just their credit is tanked and they're just what did they do? Okay.
yeah.
So they basically can foreclose on you because of the wraparound. And that's what a title company would do. Like we don't even know how to do that. That's what, yeah. And do you explain that to sellers or is that down the road or how do you position that? Because it's not complicated, it's just a little bit nuanced of like, how are you saying
It
that?
is super complicated, but yes, no, it's so important to usually we only bridge that one if we have a seller that's reluctant and is really nervous about the mortgage staying. So then we explain that part of it. We still do it anyway. I'm of the mind of not explaining things that like not creating new problems. So if they're cool with the situation, I'm still going to protect them. I'm going to do everything right, but I'm not going to go and spend 8 hours explaining how everything works. I would rather just have them have questions, explain how we overcome that. So if they're worried about it, we're going to explain this is how we're going to protect you.
Okay. Okay, so that's how they're protected. Is there anything else we do for the seller aside from like that and like the servicing company? Do you do anything else to make sure? I think it's very, it sounds like you're very transparent. There's no like hidden, like we're doing that people know what they're doing, or actually you're helping them. You're solving a problem for them.
They know exactly what's going on. If they don't, I don't know. It'd be really tough. Yeah, we're extremely transparent on that end of it. So they know what they're getting into. I think it is a nervous thing. It is one of those things that's a little bit scary, but if you kind of pitch, pitch it that way, and honestly, let's say something did happen, the economy crashed and couldn't get tenants or COVID 2.0 happened, something like that. The key is just being transparent with your sellers. Hey, we're going through a problem right here. Do you want the property back? It might take a few months for us to get up to speed. There's all these different ways or conversations you could have with them because it'd be very simple to deed it back. Of course, we wouldn't want to do that because we spent, money on the down payment, improve the property. We put a lot into it. I would not want to give it back. I'd want to sell it, figure it out, refinance it, whatever.
Yeah. I think that there's always so many creative ways to handle something. And sometimes you don't know till you're in it. We can't think of any pops. There's so many. I think the analysis process, especially for new, there's always going to be, you'll figure it out if you're motivated and you have a good community. There's a solution. You may not know what it is, right? Okay.
Like, for example,
Um,
there was a guy in our community that he grew way too fast. He purchased 150 sub two homes like in several months. And his business model was to wrap them all. So he just grew insanely quick and he collapsed. And the community actually came together after that. They kicked him out because he broke all the rules. but they came together and they actually dispoed all the properties. They took them all back over, got them caught up, got them all sold off. So pretty crazy. So just for example of what can happen if something does go wrong, that's how
Mhm.
it's a fix. There's always a fix to it.
Yeah, no, I think that's true. I did want to talk about, I know we were talking at an event. It was like, if somebody like, I think most sellers are not really in a position to be buying again, but say, hey, they want to buy in 6 months. I know that we want to make sure that they have their own, because it is debt on their debt to income. So how do we, yeah, I would love to hear more. If someone's, I don't really want to buy soon, they may not, but how do you make sure they have that ability without being impacted by the current debt? Like, yeah.
Yes, we always ask that. When are you planning to buy again? So if it's over 12 months, so if it's 12 months or greater, servicing will solve all that. So what's going to happen is they're going to get a statement every month showing that it's been paid, showing that it's been paid. There's two types of income that are on that residential mortgage loan officers look at. So they look at note income and they look at lease, like rent income. So those are the two big things. So note income takes roughly 12 months for it to roll off their DTI. So that's why 12 months is the big frame. They're going to buy something in under 12 months. We're going to set up a lease option. So we're not going to execute the sub two until they're past getting their other mortgage. That's when we usually do our execution of those, because lease income can help them qualify for the mortgage. We can give them a down payment. So an example would be, I have one in Salem right now where they're going to buy something actually in 4 months. So we set up a lease purchase in 7 months. We would give them a 3-month buffer just in case they ran into problems and need a little bit more time. And we give them the down payment in the beginning so that they can actually use that seasoned money that's seasoned at that point, because it's not coming from a foreign source. So they can use that money right away on their new purchase. The lease agreement allows them to wipe out their DTI immediately, and then they can qualify for the new mortgage. When that mortgage closes, we're going to exercise our option and then take it over sub two at that point.
So I love that. Are you making payments on that lease option upfront, or is it just the option fee that they're collecting?
Yeah, they're collecting the option fee, and then we're going to make them a monthly payment too.
Okay.
And we're
So
going
for
to make it through servicing. So this is where it gets, because this is where you could get screwed. You pay them directly and they don't pay the mortgage. And then you end up with 6 months of arrears on a sub two purchase after you already gave them a down payment. So you set up servicing to where money goes to the mortgage, anything left over goes to them. However you negotiate it, structure it.
so with the lease option, you're using a servicing company to pay, that's going towards their mortgage, it's offsetting it. And that's okay. That's interesting. It's combining the two strategies, right? But it's just first. So someone that hasn't heard of a lease option, it's really powerful. Do you want to just explain it quickly? 'Cause it's pretty amazing what you can do.
Lease options are ridiculous. So yeah, you can get payments along the way, and then you have an option to purchase it for whatever. So it's like a memorandum or a land contract. It's very similar to those ones, to where you can put anything in there. The purchase price is this. Of course, everybody has to agree to it, but yeah, you have the power to set it up to where you're going to execute it. This is the price. If I execute it, if I don't execute it, this is what can happen. If you do, this is what will happen. So you can protect yourself in case they do something to damage the property or damage the deal or whatever.
But you're controlling a property with essentially a lease, and you're giving a fee, and you have a right to exercise that option, which if you don't, they get it. But really putting nothing down, essentially like a month's of rent or something. And you're clouding the title, right? Yeah. Pretty.
Yeah, you can get into stuff especially, where it gets really powerful is like in Washington State. So Washington State with the excise tax, like you got to factor that in. Oh, I'm going to pay another $5,000 on this house for just transferring the title. Why not we set up a lease purchase to where when I do transfer it, especially if you're trying to, like, maybe you're going to wrap it to another buyer or sell it to another buyer. Why go through two excise fees? There's no reason to do that. So that's where it gets really powerful. And Oregon, we don't have that. So it's more of a timing tool that we use, or we also call it a dating contract. Like, why? Maybe you don't want to transfer title. Maybe you don't want that commitment. Let's just prove to you that we're going to make our payments on time and perform. So that's another tool you can use. I'm really, like, we have some sellers. I am so worried about due on sale and you not taking care of it. Oh, why don't we set up a dating contract? You're like, what does that mean? Okay. Basically, we're going to date each other, see if we like each other, and before we get married. So let's set it up this way to where if we make all of our payments on time, like we're promising over the next 12 months, 6 months, to whatever you set up, then you'll give me the ability to option it as a sub-to purchase and they can see that you're performing. So this is another tool for newbies. If you're getting into it and you're having a hard time overcoming that with a seller, you could always pivot back to a lease purchase and say, hey, you know what? I know you're afraid of transferring title right now. Let's just do a lease purchase and then we'll eventually transfer title if I perform.
I've never heard it framed quite that way, but it makes a lot of sense, right? You're really proving yourself with very little risk to the side. Really, there's just like a window you have, and if you miss that, or yeah, that's interesting. Very cool. Is there anything else like that we didn't cover as far as protection goes or setup stuff? Like we covered a lot of detail, I think, and I think it's important that you know what you're doing on this stuff because, like, you if you don't make that payment, that seller, their credit will go down the hill, right? It's serious stuff. I think you're committing to make these payments, right? I think you don't take that lightly, right?
No, do not take that lightly. You need to have reserves. Reserves are the other component of it. So everybody, when they're underwriting, they're like, oh, I can get into this and I'm cash flowing $100 a month, $200 a month, or whatever it is. What happens if your tenant stops paying? Because in Oregon, that's a real thing. It's a long thing. I have a duplex right now in Salem where I have a tenant that they moved in and stopped paying like the next month. Yes, you can evict them. And yes, you can do all these things. But by the time it takes 3 to 4 months after you go through the courts, they've racked up a $10,000 bill with you. But you still got to make that mortgage payment. So you do need reserves. You need to plan for the what ifs. What if the tenant stops paying? What if that's a real issue. So you need to make sure that you set aside reserves for each property. Now, as your portfolio grows, you probably don't need as much reserves, but you still need reserves because the odds of having everybody not pay at once is not going to happen typically. Even in COVID, most people still got paid during that period. There was not a lot of defaults from
I
tenants.
didn't have any. Here's the thing. I attribute it to having solid properties, screening well. That's what, and I don't know, but that's always been my philosophy is you need to have good properties. And that's the other thing. Yeah, I want to like, I don't know if you think this too, but I just had a text earlier from a friend. He's like, I got this great property. It's like, you only need 15K with the location sucks. I'm like, I don't care if it's zero down. I don't want a bad location, right? You have to look at who your guests or tenants going to be. If no one wants to live there, I don't care if it's a great deal. Like, how are you going to make it cash flow? Right.
Oh my God. Yeah. I have one in Southeast right now that it's in a bad part of Southeast. And it was such a good deal to get into. But now I'm going through that same thing where I used the wrong property management on it. And now they moved in and they stopped paying after 1 month. So we're going through the things. And it is very location dependent. It's in a place where most people don't want to live. Location is so important, even if it looks so good on paper.
That's the thing. It's sometimes we get the shiny object, but I always filter when I want to live there, like worst case, like we had to move because it also, you're going to get higher tenants that want to live there and they want to make it a home and they're going to take care of it. And so that's really important. And you have to think about that. Because you aren't agreeing to be financially responsible for this asset, I think. And that's not a small thing.
Definitely. I have several that's taken 4 to 6 months and it's just seeing that money go out every month is, oh, I don't like it.
It's perfect. It is a long game though. And I feel like we're going to look back and be like, remember when the mortgage stays here and the rents go up, but it's not without risk, right? Any of this stuff, it's really creative, but there's no guarantee you're going to get a renter or you're going to have the good ones. I think it's a lot to think, be smart about when you're analyzing a deal and knowing would it make a good midterm? Would it be a good long-term, short-term, whatever it is, right? Because there's so many ways, but if it doesn't cash flow, it's just like a wait, right? Yeah. Anything else on the kind of protection I don't know, you're in this, right? I'm honestly not a Subto expert. I just love creative financing and I love talking about it. Is there anything that you tell someone or like that you think is people don't talk about enough?
No, those are the big ones, man. Phew, you got to make sure that you're being very transparent, get everything like we covered it. So yeah, pretty much all those things we talked about, Those are the big things. Other than reserves, just make sure you have reserves. You can weather all the storms with reserves. So keep that in mind.
So I'm curious when you're looking at a property, like when I'm looking at it, I'm going through, would this be a long term, mid term, short term? What is your process for, okay, here's like what the note payment is? Like, what is your, like, do you have a number of, like, I want this much cash flow, or how do you know what a deal is? A buy box for you, I guess I should say.
Yeah. So in Oregon, what I've discovered with most people I have too is Oregon and Washington, we're both in this, it's the same boat. It's not the Midwest where you're getting a mortgage payment of $1,000 and it rents for $2,000 a month. We don't live in that area unless you're doing multifamily. You can get better spreads, but so it's really tough around here, especially getting stuff that cash flows. We're looking at it more as an appreciation play, a long term. Where else can you get debt at under 5%? That's We're looking at this more of from a private money lending aspect. Like where can we acquire debt at a very low rate so that it does either break even, because we're looking completely long term. In 9 to 14 years, it's going to double in value, typically, historically, I should say. Yeah, it's appreciation. So our buy box, as long as it breaks even, that's the typical thing. Can we get it to break even? Can we get into it for less than 10? It's usually the gold standard. So if you can get in for less than 10%, and then is it in the area you want to buy? That's really important as well. But we also look at ones that don't cash flow. So we'll buy a deal that's negative cash flow if it hits other criteria. Is there plenty of equity in it? Are we getting a really good interest rate on the second position notes? Because some of these ones are hybrids where the seller has 100 grand worth of equity. There's equity there. They have a mortgage in front of it. They just don't want to sell it for the price they want, but they want something for their equity. So we'll set up a second note. So we have a bunch of second notes that are 0% interest. So like when you look at those kind of situations, like where else can you get money at 0%? It's insane. With inflation alone eating up 3 to 5 to 8% a year, depending on what metrics you're looking at, that 0% note is gold. So we look at things that through that mirror. Now, the negative cash flow stuff, we're trying to find lease option tenants to buy those. So that's my main focus for this next year. I'm actually going to be looking for more properties, especially in our area, because there's so many of these ones that are negative cash flow that don't work as a traditional renter, but a lease option tenant is the perfect tenant, rent to own type tenants. So that's what I'm looking to do in 2025.
And it's really an opportunity for someone to get into a home, build their credit, be on that ownership path. Like I think we talked about this. I think it's more common in the East Coast, but it's a really cool strategy. And it's because it's hard. Where do you come up with that down payment? And if you have a new job or you don't have a W-2, it's like underwriting is pretty brutal, even for owner occupied. So I think
Yeah.
that's super cool. Okay. Yeah. And so God, this is such a fun topic. I feel like we covered a lot. Is there anything else? So I think the takeaways are, right, know what you're doing, you're a partner with someone, or invest in education. Oh, I guess going back to underwriting, I feel like I know, like when I have some private notes, I feel more responsible than I do the bank. I know it's the same thing as debt, but I know where they live, they're like friends now. And if I don't ever want to miss that, but the bank, I feel like it's more kind of this like institution versus, or the person you're making the note payments on. So it feels way more personal to me.
Oh yeah, completely. Especially when you're just making a payment to Mr. Cooper every month. Like it's, he was Mr. Cooper. I don't know. He's just some dude that we're paying a monthly payment to.
Yeah, it just, even though it's the same obligation, it's just, I feel a lot more, I don't know, it's a funny thing when I know where someone lives and they like trusted me to sell me their property on installment plan. I'm like very grateful and I take it like really seriously.
Yeah, we need more investors like you. So that's what we need. Especially our industry needs more people that take responsibility for it, because the one person that doesn't ruins it for everybody else.
It does, yeah, and I think there's so much of this is thrown around, like zero down and all this stuff. Yeah, it's true, but here's the thing. I bought a duplex off market zero down, but the amount of education I spent to get, and I put rehab But that was like, if I hadn't invested in education, I never would have had, I don't know how you feel about mindset, but you have to me, that's a big piece of this is that even believing it's possible to find these deals and then knowing how to deal structure and ask those questions. So they're really, you have to put some kind of time or money into this. I feel like to get the deals that you're talking about with very little down.
Yeah, mindset is crucial for having conversations with sellers, having the confidence to put your numbers together, having explaining that to a seller why you can only give them so much on a deal. Yeah, no, it is completely 100%.
Yeah. And even asking the questions that seem like you have to remember we are not the sellers, even asking the questions that feel uncomfortable. Like, why would someone do that? We don't know why. We don't know their motivations. So even being that, like, I'm going to ask a really uncomfortable what if question. And yeah. So what I love about creative, I think, is we're just helping so many different people, right? Especially some too, it's the agents getting paid. The seller can walk away from a huge amount of stress. We're helping. There's just so many ways we're helping, right? Versus if it's just other ways we're like helping the bank make money, right? In a traditional, if you're buying investment, 20%, like there's no relationship.
That's so true. And no, back to underwriting, advice I would have for anybody that's doing underwriting is to understand that you need to put in for CapEx, you need vacancy accounted for, you need repairs, you need all the basic stuff. Cause everybody, I see a lot of deals come through and they don't underwrite for that. They don't put in for those kind of contingencies. And it's not something that's going to eat away at you right up front. But once you start building your portfolio and start having some water heaters fail, need new furnaces, need a new roof, all those little things, they do add up. So if you're not setting aside money that's coming in, or if you're underwriting it too tight, that's the one thing I do see with a lot of deals that come my way is that the underwriting's so tight where they don't account for CapEx, vacancy, repairs, or even property management fees. Like I've seen some stuff, they don't even put in for property man. Yes, you can self-manage, but you need that costs money, it costs your time, or you can pay someone to do that. So you still need to charge for it in your underwriting.
No, for sure. And that's one of the lines I like. I'll put it in and I'll noodle on it because I'm doing it myself. But like, what if something happened or I couldn't do it? It should that I feel like the property should support itself. And part of that is it needs to be managed. If it's us doing again, it's our time that if we're underwriting where it's so tight, then it's just I need is a long game that what's the point, right? Honestly, like the income needs to support the debt in my mind. And that's really important. But I just thought of something I was like to ask this. It was like this huge debate investing in your own backyard versus out of state. Like, I obviously have my preference. I'm curious what your answer is to the benefits of in your own backyard versus out of state and some crazy cheap play.
Oh my gosh. I am so tempted. I keep telling my wife, I'm like, oh my God, this dude in Indiana right now, he's buying them grand, he's putting 50 into it. And I'm like, I could just go clean up if I moved to Indiana. Do you want to move to Indiana? And she's like, absolutely. I love the idea of investing other places. I'm just too scared to do it. I love being in my okay. So as a contractor, I am a contractor and I've been a contractor for since I was in high school. Like I opened my own, I started my own company like before I even graduated. So as a contractor, I've been on so many projects and seen all the things that can go wrong. I have friends that tell me like, "Oh yeah, I bought this deal in Louisiana and I got somebody over there, a contractor." And it just scares me so much because I know what can go wrong even with stuff that's in my own backyard, let alone all the way across the country. Yeah, I am nervous about doing that. Even though I purchased one 6 months ago in Louisiana of all places because we were going to wrap it and it's a failed wrap. So now we're pivoting to get a renter in there. So we're going to be keeping this one for the foreseeable future. But that was all long distance and it really wasn't that bad. Our partners on it lined up contractors, got all the things done. It's worked out so far, but I still don't like the idea of doing that.
Yeah. To me, I know the market. I know the nuance of what street, like you can go over it. That to me, I just want to see it. And I don't know, maybe it's like a mindset thing, but I just can't get over that. Yeah. And also our appreciation, our cash flow. Yes, it's not great for landlording, but I just, to me, all those things outweigh I might get a super deal, but there's no appreciation. So to me, it's a long game. You're not even going to get that
You can't. Yeah, I know. Even those houses in Indiana, they've been stagnant in appreciation forever. The only advantage is just the rents have gone up. Values have not. So it's like
Right.
a weird thing that's going on. But yeah, I know. I'm tempted all the time to do stuff over there, but I don't know. I like being able to see things that are here, even though I don't go to once a property is stabilized, like I have
Right.
this many of them. I haven't been there in years. They just,
Mm.
yeah, the property management does their thing. They give me updates. They let me know when I need to do something that's more than what they can handle. So
Mhm.
yeah, it is pretty simple. I would prefer to own assets in other states. There's definitely states that are easier with landlord laws, or even if you're doing wrap mortgages, like way more friendly than Oregon. But no, I like Oregon. I like where we're investing. I like the properties we own here.
Yeah. Yeah. I think you have to just figure out it, and also your risk tolerance. For me, I feel like I do calculated risk, but that to me, that's beyond my risk tolerance personally for all the reasons you said. I like real estate because I can affect it. I can fix something. I can do something to improve. I can make it a midterm if it's not cash only. I have that influence on it. And to me, like I'm not going to fly in to see a turnover. I, that's
We're not going to
really,
hop on a plane and go to Ohio.
but, but I think whatever you do, just dive in and do it what feels right. And people kill it with that. But you don't just do it because it's trendy, I guess is what I would say. Because
Oh
like
yeah.
really,
Oh, definitely.
yeah. I know we're going I just got a couple quick questions and we'll do a wrap up. Kimberly's asking servicing company. If you want to answer that, it's not an escrow company. If you want to explain that.
Yeah. Yeah. So the questions, what is a servicing company?
Yeah.
Yeah. So servicing company it's like an escrow. It is like an escrow company. So it's like a neutral third party that will receive funds from one party and distribute them to another party. The advantages of having a servicing company versus just, okay, imagine that Shona's got a house and I bought her house, and Shona's, hey, you didn't make the payment this month. And I'm like, I made the payment. See right here, it went out of my account. There's not, it's a he said, she said weird situation, but with a servicing company, they're neutral. So you send them money, there's no reason for them to lie about it or to misrepresent. So it's a great way to have a neutral third party handle funds in a transaction that needs transparency.
Yeah. And the neutral thing I think is key, right? And you're not trusting someone to remember to write a check or like they forgot. It's just that's their job. So I think it's really important. Yeah. Okay. I don't see any other questions. If there's any other questions, feel free to chime in. Okay. If there's anything else that we didn't, I know we covered a lot. Otherwise, I'll just start wrapping up here. But this has been a fun conversation.
Oh, we covered quite a bit. So I'm excited to see. Are you going to be buying any Subto deals in
I,
our area?
oh, my interest is peaked. I think I love like installment plans because it's just like it's a blank canvas. But no, I feel like it's a toolbox, right? And when you have the right tools for the right thing, it's certainly, there's an appeal to it, right? And I think we forget when we're buying property, the debt and the property, they're not necessarily the same, and we can separate those. And sometimes we're buying a property just for the debt, right? Which is a crazy concept.
I know it's very weird when you think about it. Oh, so some things to look out for that we didn't touch on when you're purchasing. Go with the big servicers, like when I mentioned Mr. Cooper, Lakeview, all the massive servicers are very safe bets, because when those mortgages are originated and the servicers set in place, they literally throw them in a bin. So that's not something they're looking at. You run a higher risk of due on sale or issues with like local banks. So community type banks. If you see a mortgage that's with Qua, or I saw one the other day with Umpqua, I didn't know they were even doing that, but Qua or KeyBank or something like that, somebody that's a local bank that issued a mortgage, those ones are more sitting on their desk. They're closer eyes on that. So
Mhm.
you do run a higher risk on those ones. So do keep that in mind. I think that's one pitfall. Another pitfall I can't believe I didn't bring this up earlier. Now that I think about it, when a seller has a loan modification. So anytime they have, a lot of times in a foreclosure situation, the arrears are piling up. They go to the bank and qualify for a loan mod. So the bank comes in, piles up all those arrears into a 0% interest. tack it on at the end kind of situation, but they sign documents saying that they're going to live in the property for usually it's 12 months or something. And you can get in trouble if you're coaching them to get a loan mod. So for your benefit, like if you're coaching them to go through the process and lie to the bank and say that they're going to stay in the property for 12 months, you can get in trouble in those situations as well. So my advice on those ones, like it's not a problem for people to get a loan mod and to go through that whole thing, but you don't want to coach them. And if you do purchase their property, set it up as a lease option. It puts them in a good situation. So they're not technically violating their terms. They're still selling to you at a later date, but it just protects everybody. So be very careful of loan mods or government assistance. We see a lot of state assistance where they'll do the same things. They'll put, like, I had one in Salem. The lady she got like $112,000 from the state of Oregon in a grant or loan mod on there. It was like 0% interest for a very long time. Be sure to read those documents and see that you're not putting them in a higher risk situation.
That makes sense. And those are set up to help homeowners and keep them in their homes. And we don't want to take advantage of that. So yeah, that's a really good point. Okay. Yeah. Thank you. Just be ethical, right? Just do their okay. Thank you. That's great. Okay. So a couple wrap up questions. And I think I sent you this ahead of time. Top business or life advice to live life on your own terms.
Oh my God, take action. So I don't know how many people I talk to and they're like, I think I'm going to do this. I think I'm going to do that. And I'm going in this direction. Just take something that you're interested in, narrow that down to, if you have 15 things that are so interesting, find the one that really resonates the most. Even if it's only, if you have 15 things and this one's a 9 and the rest are 8s, do the 9 thing, but do it for 90 days. Just commit to it for 90 days. If after 90 days, it doesn't work out, do something else, but at least commit to 90 days and take action every single day.
Yeah, because to see and often there's like this iceberg, right? And we don't see the fruits of that, and it's building, and it's like we stop right before there's that. Yeah, I love that. And then the action thing, but the 90 days, that's like commit to it, and that very good advice. Okay, what is your most valued personal or business asset?
Oh my gosh. I would say persistence. I think it's really valuable, but it's also a detriment is I don't like quitting. So I will stay at something way too long. There's things that I should have quit on a while ago and I stay with it, but it really works out for you when it's really beneficial. If you stay at something and just be persistent, it comes into that 90-day thing. If you have ability to stay at something for long enough, you will have a breakthrough. So that's where I think one of my more strong suits comes into is that I like taking action. So when I see something I want to do, I go full force at it. I almost get tunnel vision on it and I just stay at it and it helps out. It works. It's worked out for me.
No, I think that's true. I think you do, and not to see the results. I love that. This kind of leads into what's your superpower? Maybe that's what it is, or maybe it's and how do you use that in your business?
Oh my gosh. I very persistent and push forward nonstop.
I have that same trait. It can be a double-edged sword, right? Sometimes I just be like, but oh yeah, bang through stuff. If I set my
People
muscles,
think you're annoying because at my office, like when when I see something that needs to be corrected, I'm so dogmatic and like, why are you micromanaging? I'm like, I hate micromanaging. I absolutely hate it, but you're not doing your job. So we need to work on this until either you start doing your job or you need to move on and I need to find somebody else that will do it.
yeah, no, that's that you have to. That's otherwise things don't happen. Okay, I always like to ask like a book or a podcast or a community that you'd recommend and why.
Oh yeah. Subto community by far has pushed me. I wouldn't have had the growth. Currently have 28 doors. We wouldn't have had that growth if it wasn't for the community. And every time I see Pace, I always thank him for that because he really paved the way he was community member number 1. So he's paved the way for everybody. Yeah. The community has everything in it that you would ever need for real estate. We have all the different channels and avenues. It's a little bit overwhelming because when you get in, there's so many shiny objects and everybody flounders. A lot of people do when they first get started. But yeah, that really has propelled my growth the most.
Okay, yeah, and I think you have to find what resonates, right? That's really important of someone's style. Like, and there's so much content out there to consume before you make that decision, but it's really important. And if someone is, I don't know, local in the Portland, Oregon area, like wants to just reach out to you, I know you're like really helpful and what's the best way to get in touch if they want to reach
Yeah,
out?
Facebook. You can find me on Facebook or Instagram at the Rob Harden. So you can find me there on Instagram. I'm trying to post more. I just get so busy doing the business that, yeah, that I
Yeah,
forget. But yeah,
totally.
definitely hit me up on there. And if you have something you want to talk about, more information or whatever, I would love to help.
Awesome. Yeah, no, I always see you at all the events too. It's because so we're like the regulars.
I know, I know. I always see you. Yeah, there's a certain group of us that we're at all the ones. Like I'll be in Salem tomorrow night at the Salem real estate meetup.
I've
Every-
heard that's really good. I've never made the trek, but I know it's
Oh
not
my
that far.
gosh.
But
You
is it
need to cut. Yes,
okay?
they're the guys down there, the crew down there's so many good investors. I slept on that one for I don't know, it was like a year. I was like, Salem, like how could it be any good? Come on, it's Salem. I hate to say it that way, but it's not Portland.
We're like,
I know. Sound like a snob. But then I went down to the Salem meetup and there's guys doing these crazy deals like Trevor Howard. He's doing like Morby methods, doing really complex stuff. And you had Gabe down there, Dane McKinney. There's a really good group of investors down there. You can learn a lot from them. So, yeah, the Salem one I always go to. I always go to Investor Labs. I've been frequent. I'll be there this week. Are you going to be at Investor Lab?
yeah, I feel like yeah, that's the place. Like that's
Oh,
where the real
nice.
cool kids.
Yeah. That's why you're there. Yeah. See?
Yeah, I mean, I think for anyone, like I'm like a super introvert, but and everyone also feels somewhat awkward, and everyone's very supportive and relatable, and you can wherever you're at in the journey. I feel like this community. I don't know other communities, but there's no ego. Everyone's willing to help and just talk shop or wherever you're at. So if anyone's, I don't know anyone. Like I didn't either. I just started showing. So
Exactly. Just show up. Someone will see you standing there and come talk to you. So
yeah,
I do. Try to look around the room and find people I don't know yet. So definitely
yeah,
show up.
totally. That's what it's about. Robert, this was really fun. Thank you so much for sharing all your knowledge and I think we inspired some people and just, yeah, it's just a fun game. You got to get in it though. You have to be in the game to learn it.
Thank you so much for having me. I know we've been talking for a while now, so I've been wanting to come on here and hang out with you. So I always like seeing you and we have the best conversations because we're both so into creative finance. We know
Yeah,
that.
no, and I feel like you never stop learning, right? I always learn something. I'm like, I think I've learned every possible strategy. And then I'm like, okay, I guess I'll just never stop learning, right? Awesome. Thanks again. I'll tag you everywhere. And yeah, so I'll see you on Thursday at South.
Awesome. See you there.
Awesome. All right. Thanks.
Thank you.